Good afternoon, everyone. I hope you're all doing well. Just popping through again here at Alpha Capital Group with another market outlook video. So I suppose the key points of interest to be watching this week, of course, we do have midterm elections in the US. We do have CPI in China tonight into early tomorrow morning. We do have a US CPI on Thursday as well, which we'll be looking at through the course of the week. So for those of you who aren't aware or who haven't been following that closely, we have uploaded in our Discord community a breakdown of the midterm elections, what to look out for in different scenarios, and of course the trading scenarios that could develop off the back of the news as well. So that's going to be particularly relevant for the fundamental traders, the short-term traders, or the scalpers as well, for those who are following closely. So of course, as we look at the economic calendar this week, we are seeing volatility starting to increase today in the back of, I suppose, some of those fundamental rumors and stuff that's breaking through regarding the midterm elections. So, of course, Republicans v. Democrats, who will take control of the Congress. And, of course, whoever takes control of the Congress will very much have a strong dictation of what will happen in the next 2 years for the US broader-based economy. So, of course, whether the Democrats win and Biden assumes absolute control over policy, or whether the Republicans win and his control is, I suppose, reduced quite dramatically. So we will very much be watching that through the course of the week. So elections start, obviously, this week. We are expecting the early results out as early as tomorrow morning for those in the US. So that would be kind of tomorrow morning UK time as well. Overnight in the US market. Of course, we are waiting to see what develops. Of course, if the Republicans take control, the likelihood is that President Trump of 2018 into the early parts, or 2016 into the early parts of 2020, will be rerunning again against what I would suspect to be another election term by President Biden. So very much kind of watching that closely as well over the next few weeks. So of course, it will take probably a couple of weeks for all the dust to settle in the broader essence of the markets. But of course, it should allow for increased short-term intraday volatility as well, if you're categorize yourself as a short-term trader. All right. Now, as I said, looking at kind of the events for the next day or so, we will cover the US CPI on Thursday ahead of the data. So we will obviously be looking at that closer to the time. But tonight, into the early parts of tomorrow morning, we do have Chinese CPI. So, of course, the higher Chinese CPI, the negative, the growth dynamic will be particularly out of Asia overnight. So, of course, you want to be looking for, if you are long indices or long anything against the dollar, you would generally be looking for weaker CPIs or modest levels of CPIs. Now, of course, the previous CPI for China was 2.8%. The forecast is approximately 2.4 to 2.5, depending on the economic calendar you're looking at. So they are looking for reductions. Of course, if we see inflation at 3.1, 3.2%, that would be a change in risk orientation during the Asia session. So that would be factored in accordingly as well. Now, tomorrow, we do have a number of speakers. We've Haskell, we have Williams, and we do have Elderson from the ECB speaking tomorrow. And of course, today we did have Governor Pill on the wires. We did have the Swiss National Bank Chairman Jordan on the wires as well, with Governor Lowe. So we've had kind of a few speakers today. We have a few more speakers tomorrow. So that should dictate a little bit of short-term bias, particularly in the FX markets as well, in the broader sense. So as we move across the price action from our weekend markets video on Saturday and over the weekend, we can see that this narrative of stronger indices, weaker dollar has continued to play out. So I suppose this idea of seeing how the market settles into the early parts of the week, we had a little bit of a temporary rise into yesterday. That's very, very quickly eroded this morning as the dollar weakness continues as we pare back. So you can kind of see this shift in sentiment we talked about over the weekend, those lower lows, lower high scenarios. Markets is broadly on the back foot again into the middle of this week. And of course, if we do see Republicans taking control and we do see the idea of Trump running, so Trump has said that on the 15th of November, which is next Tuesday, he will be making a decision on whether he's going to run. And of course, we know from 2016 to 2020, when President Trump ran, of course, the stock markets rallied quite significantly. So, of course, we'll be watching that very, very closely and seeing, of course, with the dollar on the back foot this week, following over the last week or so, is quite interesting given the fact that how bullish we were off the back of the FOMC just a week or so ago in the broader sense. So, of course, markets heading higher, stock markets heading higher, dollar on the back foot again, which is good for risk aggregation or risk orientation in these markets. So if we look at some of these FX markets very, very quickly, you can see euro dollar is continuing to churn higher. This 4-hour order block up here that we talked about at the weekend at 101.277 is now approaching. We have kind of taken out those short-term highs at 100.80, and markets is obviously progressing to the upside. So we can see that there very, very clearly. Risk orientation is obviously still continuing to the upside. Weaker dollar means stronger euro, stronger pound, stronger gold prices as well, which we'll be looking at in a moment or so. So euro very much to the upside as well. Orientation, as I said, I'm not really looking at euro until it kind of gets back into this liquidity area around 101.50. We have broken back above parity today, which is a short-term level of interest. And of course, we are looking to create new higher highs in this short-term bullish cycle that we talked about from the weekend. So of course, if you haven't seen that video, feel free to watch it. It's quite an in-depth video of the current markets, and of course factoring in the liquidity after last week's FOMC and weekly close. So of course, where does that leave us then in the likes of some of the other pairs? So cable continue to churn higher. Okay, it's taken out the short-term liquidity area around 115.50 and is still continuing to churn to the upside back into this 116 level. And we have mentioned this area at the weekend at just underneath 117. Can the markets continue churning higher? So we've making this short-term highs, short-term lows, kind of gradual assimilation, new highs, new lows again. Markets is trying to push back up. And in that case scenario, we should be looking for this short-term price action structure to be engulfed and for the markets to continue trending higher. So that'll be interesting to see, particularly if that dollar weakness remains through the middle part of this week and into let's say Thursday CPI. It could be a case of trying to get these indices as high as possible, get these pairs as high as possible in the currency markets. And then, of course, if that CPI doesn't deliver, then, of course, you'll get that unwind on Thursday, that midweek reversal that tends to happen as well. So obviously watching that very, very closely into the middle part of the week. So as we move across, just to finish, I suppose, the quick viewpoint on the currencies, dollar CAD, the loonie has broken structure, is still selling off back into this kind of 132, 133 region. And the market is in a fairly corrective structural straight at this moment in time. We talked about this liquidity level of 138, rejected. And since then, the market is approximately 400 points lower, which is, again, indicating that very corrective move. And of course, with the stronger oil prices over the last 2 weeks, 3 weeks or so has held up relatively well in that kind of high 80s, low 90s level. If that continues to play out and you see that dollar continue to roll over on the index, you should be looking for that dollar CAD assimilation to the downside. So gauging the sentiment, gauging the fundamental correlations, and then being able to articulate that back into the price action, broadly speaking, as well. All right. So that rounds out dollar CAD. Aussie dollar USD short-term perspective has broken through this range of consolidation. So again, this is what we're looking for today. Could the price action break through? Can we see that continuation to the upside? This short-term level has been broken out very, very clearly. And of course, this area of liquidity has been taken out as well. So this area between 65 and 65.50 now looks to be engulfed as the markets are correcting. But of course, if you were to look at the daily time frame, does that mean that Aussie dollar USD is going to continue trending back up into this area of interest up here? So if you're looking at this now from a daily perspective, this area between kind of 67, 67.50, once we take out this high, could be an area of interest that we could be looking to over the next week or so. And of course, that would assimilate again, corrective structure, pullback, corrective structure, pullback again. Bearish corrective structure, I mean, in that. And of course, new bearish trend with a pullback as well. So we're obviously looking to see how far does this bullish move against the dollar extend. We're definitely looking at this area of interest, as we said here, around 108 on the DXY. But of course, that 108 move in the DXY does allow for 117 cable, 102 potentially on euro dollar, and of course back to kind of this 132, 131 level dollar CAD. And as I said, Aussie USD potentially into 67.50 against the USD. So we're obviously watching that very, very closely. Now, again, with the association of volatility regarding the US midterm elections and a few other other narratives that's been posed in the markets, we have seen gold absolutely rocket today. We've broken out of this consolidation. We've broken out of this 1 hour order block area. We've taken that out. We've taken out the highs from prior to the US CPI data, which is now dealing back approximately 4 weeks, now just under 4 weeks, and that very, very strong impulse have moved back into this 1720 level. Now, if you look at your 1 hour charts and you look at your 4 hour charts, we have a 1 hour, 4 hour order block level here around this 1620 level. And we talked about it at the weekend to see, could the price action get back into 1620? Well, this price action structure now is getting my attention to see how does the markets react at this order block level. We've come into the 1720. Is there a reaction at this zone, or are we going to try and take the liquidity? If we're taking liquidity, we should be seeing the price action try and take the wick highs here at 1735. So that is something to keep an eye out on into the middle parts of this week as we reflect on the midterm elections from a fundamental perspective, but also as well in the back end regarding the CPI data that we have Thursday afternoon at 1:30. So obviously watching that closely. Now, again, with that stronger movement against the dollar, we are seeing the stock markets continue churning higher. So you'll see that move, this area that we talked about, this short-term liquidity high at 37.80, looking to see could the price action break through 3800s. We got the little breakthrough, and structurally speaking, if you're looking at the price action here today, just underneath 3800, we had that wick high, we broke through, we got the rejection of this level, price action maintained above, and we've just continued to grind higher through the course of the afternoon. So the last kind of 2-3 hours particularly, but even since 8 o'clock this morning, the markets has been heading gradually higher. We had a little bit of a corrective move in the open, but in the last 2 hours or so, markets still churning higher. So indices moving higher, S&Ps moving higher. So of course now it becomes a case of we're moving back into this 4-hour order block level from 39.05. So if I just show you there, we have a 4-hour order block level, but don't be surprised to see that potentially being broken as the markets look to correct. So we've also identified this area around 39.40, 39.60. We've got the order block level at 3900. But if you go up to the daily time frame, you will also see this daily trending impulse of price action. So the markets now are correcting bullish trending price action back into this level of interest. So worth keeping an eye on this daily level, 4-hour level here as well. I'm just going to outline that 4-hour level, and then of course this daily level up here as well, as I said, way up above this kind of 4,000 level. So buyers are in control at this moment in time, but of course we have seen how quickly these pullbacks come. So you do have to be nimble, and you do have to be reflective of that within the price action. Now, of course, if we move across, Nasdaq again has seen that lovely correction. Okay, nice correction off this liquidity area. Didn't break through the 10.6. We had a bit of consolidation through 10.6. We've gradually assimilated higher yesterday, and of course that has continued today, where the momentum has picked up quite a bit. We've gone above 11,000. This short-term liquidity area here, 10,950, held above it, and the markets is continuing to trend higher. So at this point in time, you would still be seeing, well, indices is continuing to move higher. So this is where I'm looking at now. This 4-hour short-term level at 11,500 is a nice corrective level. So you've seen this sell-off from 11.5, 11.6, all the way back into 10,600. So that nice little 900 to 1,000 point sell-off. Markets is corrective back into this level of interest. So worth keeping an eye from an order flow perspective. We had the FOMC wick last week. We had that very, very clear sell-off last Wednesday, and back into this liquidity, and we are picking steam up again. So it'll be interesting to see, can the price action now today, tomorrow, or over the next day or two engulf this FOMC wick high, take the liquidity, and come back into this 11.5 level from a longer term perspective. And that's what traders will be looking at over the next couple of days. Now, finishing off with the US, with Dow Jones, and then moving across to Europe very, very quickly. This 4-hour level around 32,500 was taken out very, very clearly. And of course, sentiment to continue to move to the upside has allowed the Dow Jones to continue trending higher back into this daily level. And you'll even see on the 4-hour chart, we've taken out the daily order block. We are trending higher, and we are trying to take out the 4-hour level. So when you're looking at it on this broader perspective, can the price action now get back into this 33,800 area, right? You've seen that daily sell off from 33.8, just underneath 34,000, all the way back down to 28.8. All of a sudden now we're trading somewhat 4,500 points higher back into this 33,000 level. And of course, 33.3s is where we're at. But my perspective now is keep an eye on this 33,800 level to see, can we fulfill that daily order block move over the next few days or so. So sentiment, still risk orientation into risk assets out of the dollar. So it's important to, as long as that sentiment remains, to have that clear bias in the back end. Now, meanwhile in Europe, if we look at the DAX and we look at the FTSE, you will see DAX is taking the liquidity highs. We talked about it potentially on the weekend. We got through yesterday. Initially, obviously, price action failed, but today has completely taken out those highs at 13,550-ish region, and we've continued to progress higher. So similar to the Dow Jones, can we get back into this daily order block here at 13,800 to 850 to 13,900? Of course, we have a daily order block level, and if you look at the 4-hour chart as well, just doing a little multi-time frame analysis, you can actually see that there's a 4-hour level up here as well. So it'll be waiting to see, can the price action mitigate this level also on the DAX. So you've got two very, very interesting levels there on Dow Jones, secondary one on DAX, worth keeping an eye on. And of course, when you look at the FTSE, I know we talked about weekend, this gradual assimilation to the upside. This movement in the FTSE has been so clear. Breakout has held above. We talked about that 1-hour move at the weekend, short-term structure. Yesterday, obviously tried to break through. Today has followed it up, and we've continued moving all the way higher. Now, we are approaching this 74 daily area. So now it becomes a case of how does the markets react at 74? Well, I preference is towards the 74.60 level. We've got this 4-hour sell-off, very, very quick, swift sell-off into this consolidation, and then breaks down to the bottoms. We're now in a very, very corrective structure as price action pulls higher into this level here. So worth keeping an eye, how does the markets react? We are obviously still very much bullish, of course, waiting to see how does that play out, because of course, markets since the weekend, since the early parts of this week, is continuing to trend higher, which is obviously great for risk assets, but also it's allowing opportunities to mitigate those selling trends that we saw through August and September accordingly. So from that perspective, obviously waiting to see how does this 4-hour level up here around 74.50 react. So 74.60 is an interesting level. So that's where we are from a price action perspective. All right. So as I said, all eyes really towards the fundamentals this week, midterm elections, of course, CPI on Thursday. Could we get that buying impulse to ultimately erode those highs and get that midweek reversal on Thursday on the back of CPI? Let's just wait and see. But of course, into the early parts of this week, very much observing the risk orientation here. Stronger indices, weaker dollar, stronger gold, stronger euro and FX pairs against the dollar is obviously noted as well. So as I said, as always, guys, trade safe, ladies and gents. Utilize the risk management, of course, whether you're trading with ourselves or anywhere else. It's important to factor that in. And as well, on a side note, I have been reminded to tell everyone that during November, for those who sign up to challenges, there is a 150% fee refund. So if you pass, you take a challenge in November and you pass, you will get the reduction or the fee refunded to the value of 150% of the fee price as well. And that will be paid out as well. And of course, we are running a competition in December. So for those who are in the competition page or signed up to recent challenges, of course, be aware that we are running a competition in our community on December. So make sure you follow on social media and, of course, in the Discord community for details associated to that as well. Okay. Have a great week, everyone. We will be back on Thursday to preview the CPI data. But until then, trade safe and be well.